Kiran Mazumdar Shaw successfully took yet another company public a decade after BIOCON'S IPO. Investors lapped up Syngene, the first pharma IPO in over 5 years, with the issue subscribed nearly 32 times. Here's an insight into the Syngene journey at its headquarters in Bengaluru with its top management.
What better place to cover this than at the sprawling campus of Syngene in Bangalore. Now, Syngene is one of the leading contract research organizations in the country and counts almost 8 of the top 10 global pharma names as its clients. To understand Syngene better, what kind of value this will create for shareholders, we talked to Kiran Mazumdar Shaw. Kiran, thank you so much, the promoter, and she will really take us through the Syngene story, what value creation it has for shareholders going forward. Kiran, I think the last time you did an IPO was, nearly a decade back, Biocon. When you're doing Syngene now, does it bring back a sense of nervousness? What is really going through your mind today?
I was certainly never nervous about going to the capital market, and in fact it's a very exciting time for both Biocon and Syngene because we are unlocking the very latent value that Syngene has within the Biocon valuation. And I think it is very important for me as the main promoter of Biocon and then Syngene later on to unlock this very important value. And I think Syngene is now poised at a time when it is on a very, very strong and robust growth trajectory, and that is why we are taking now Syngene to the market. This is also a time when Biocon needs to monetize its investment in Syngene, which it has carried for so long, and therefore I think it's a win-win for both Biocon and Syngene.
Right. But compared to the feedback that you received during the Biocon IPO, are people a lot more receptive now because they really understand the sector, understand the business? Because I'm sure it would have been very tough to actually explain Biocon's value proposition to investors then. In that sense, has it been much easier now with also the credibility that you've carried through Biocon in the last decade?
Well, let's put it this way. Syngene's business model is a much simpler story to tell. Right. It's a much easier proposition to make. And therefore, I believe that, the Syngene growth story, the Syngene business model is something that I don't really need to sell in the way I had to Biocon.
Right. Talking about valuations, as always, it's divided. Some people say, okay, it might look like a steep valuation, but completely justified if you look at the revenue, the margins, the growth potential going forward. But others say that, considering just 6 months back, this was valued at 3,800 crore. Now it is over 5,000 crore. So what really has changed in 6 months? What would you say to that?
First and foremost, I want to correct that perception that it was just 6 months ago that the value was 3,800. The valuation process for Syngene at the 3,800 crore investment was started more than a year ago. It just so happened that because of various regulatory requirements, especially FIPB, that it took 6 months to actually translate into the real investment. So I think over the last 1 year, I think Syngene has delivered on a lot of its growth engines. And I think if you look at the kind of margins, the growth trajectory, things have actually changed dramatically. And therefore, that growth trajectory that they are on today absolutely justifies the 5,000 crore valuation that we have actually come to the market with. And I think it is reflected in its, the margin story, the growth story. If you look at Syngene's CAGR, if you look at Syngene's margins and sustained margins, I think all this is very compelling and a very fair valuation that we are coming out with.
Right. Just one more question on this valuation bit, 240 to 250 rupees per share. Analysts are saying, this is already 20 times forward earning multiples, the parameters they're using. So they're saying, it's already so highly valued. So what is left on the table for retail shareholders? How would you counter that?
Well, I think it's a very fair valuation because if you look at Syngene's value proposition going forward, it is a very, very strong growth story and you're investing in that growth. So I think it's very justified. There's a lot on the table going forward. And I think investors in India need to invest in such growth stories. We are a very unique script also. Remember, Today, I think Syngene is not only the only script of its kind in India, but also if you look at it in Asia, you know, the biggest competitor and the only competitor we really had in Asia was Wuxi. And Wuxi has already announced that it is delisting. Now that means Syngene becomes the only script of its kind.
Right. I was in fact coming to that. CRO is something that most pharma companies, they always have a CRO business. So, you know, what unique value proposition does Syngene bring to the table compared to its Indian rivals, compared to its global rivals? What value proposition does Syngene?
So first and foremost, I think Syngene has come out with very differentiated service offerings. You know, the end-to-end integrated service proposition that it has been making to its customers has really played out well for us. Secondly, if you look at our compliance culture, I think Syngene has an excellent compliance culture. You know, we have, passed muster with all the regulatory agencies globally. And you know, that's going to be extremely important. We have an impeccable track record in terms of IP protection. And I think that is very important for any research services company, because even Wuxi has had to, answer some of those IP challenges that it has faced. And if you look at, Syngene in terms of the kinds of differentiated services it provides,
Right.
I don't think any company in India or in Asia for that matter comes close to the kind of differentiated service offerings. Bioanalytical, biologics, the kind of integrated service plays, the kind of preclinical capabilities it has. And I think what really augurs well for Syngene is the capability base and the capacity that it has created.
Right.
So it has got scale. And I think that is really what we are now ramping up and driving growth with.
Right. I also want to understand how the proceeds will be used, because, you know, since this is an offer for sale, the proceeds will be used by Biocon. So how is it going to be used going forward? Have you identified where you will be deploying the money, and also, you know, a time frame for the same?
So you know that Biocon is betting very strongly on biosimilars and biologics per se. And I think this is a huge opportunity for Biocon because we are front runners in this game. And I think you can also see that the biosimilar space is now becoming far clearer than what it used to be, even in the US. And you know that between Mylan and Biocon, we have a large number of biosimilar programs in phase 3 global clinical trials. In fact, we have the largest number of biosimilars in global phase 3 trials. You know, we have 5 programs, and that means we are going to unlock huge value in the near future. Now, in order to really address that huge opportunity, which is becoming far more visible in terms of real opportunities and, ground opportunities to race with, I think you need to make sure that you have the scale with which to address this opportunity. Otherwise, you will have regulatory approvals and you won't have enough capacity to deal with that huge demand. We are already seeing huge demand in emerging markets, for biosimilars. And if you couple that with the large demands that we are going to see in the regulated markets of US, Europe and Japan, we clearly understand that there are very few players in that market, at least for the foreseeable future.
Right.
And that means you need to make sure that you're right there with the capacity play as well. And in order to do that, therefore, we are going to use the proceeds of this IPO, of Syngene's IPO, to address both capacity expansion and invest in our R&D clinical development, the clinical trials that we are conducting, so that we are fast to the market, because we don't want to, slow down those investments, because they are extremely important for us to race to the finish fast.
Apart from Biocon, Syngene itself has capex plans of $200 million over the next few years. It plans to get into the contract manufacturing space as well. A few molecules are also in the clinical trial stages. So where is that going to come from? What are the next big bets for Syngene going to be in that sense?
You know, Syngene has a very healthy balance sheet, and it is very profitable. So certainly internal accruals are going to help support those investments. In addition to that, we may decide to take on a small debt, but never beyond a 0.5 debt equity ratio. So I think we're in a very healthy position to support all the investments that are required. The near terms can easily be funded through internal accruals, and if we want to invest a little more, this can come out of, if we choose to raise a debt, it can really afford to take that debt.
You know, I was just going through the Syngene financials, and with CAGR of 28% over the last few years, and I think margins of over 30%. Is that sustainable? Because now it's a services play, but if they're getting into manufacturing, how will that affect the financial portfolio going forward?
See, this is not about manufacturing generics. Right. This is about manufacturing NCEs, and that is a high margin play again. And therefore, I believe that both the kind of manufacturing strategy that Syngene has and the service offerings that it has, it can sustain these kind of healthy margin and growth numbers.
Kiran, finally, for a shareholder or an investor watching this interview, if you look at the returns that Biocon has given them in a decade, right from the time they bought it initially to now, it would be 50%. And a section of the street feels that other pharma companies may have delivered multi-bagger returns, over 100, over 200%. So how would you convince them that Syngene is a very good story to buy into? If you have to convert the skeptics to your side, what would your argument be?
See, the problem with investors in India is that they cannot see below the iceberg. They only want to value the tip of the iceberg. And I think in our case, the story is below the iceberg. There's a lot of unlocked value. Yeah. For instance, nobody valued Syngene until we even started with the private equity investment that unlocked a certain base level valuation. And now when we come to the capital market, you're seeing that Syngene's valuation itself is 5,000 crores is what we've plugged it at and pegged it at. So if you look at Biocon's valuation in that context, I believe Biocon is extremely undervalued. And if you look at the huge amount of unlocked value that Biocon has in its biosimilar programs, in its novel biologics programs, and in its core businesses that are also growing, I think you will see that the markets have probably not looked at Biocon, the way they look at other pharma companies which have a very predictable story, but there's no unlocked value for them to look at. They just keep looking at ANDAs and para-4s, and then they look at that valuation, which is very simple to understand. But there the iceberg is fully visible to them. They are not able to understand what's below the iceberg, and that's the story we are trying to get the markets to understand, which we are now going to do through unlocking Syngene. Right. And hopefully that should re-rate Biocon. And as we now start unfolding the biosimilar story, I hope that will only help the markets to understand what Biocon is all about.
We spoke financials with Kiran, we spoke valuations with her, but now we are going to get into the nitty-gritties of Syngene, which is why we are here at the Syngene manufacturing plant in Bangalore. Now, Syngene employs over 2,000 scientists, and I feel like one myself wearing this coat. But to understand more about Syngene, we're in conversation with Syngene CEO Peter and their COO Manoj. Thank you so much for being part of this special show. Syngene is getting listed on Monday. Obviously, a lot of focus on the financials, but take us through, what really happens here. If you have to explain this to a man on the street, a viewer on TV, break it down and tell us what value Syngene really adds.
Sure. Well, Syngene is one of India's leading contract research organizations, and we provide discovery, development, and manufacturing services to the global pharmaceutical, biotechnology, and life science industry to support them in achieving their goals, which are to advance their medicines and products towards the marketplace. So our scientists are working in an extensive platform of laboratories and manufacturing facilities here, really looking to put science to work. But the science we put to work is the science of our client base and helping them reach their goals and objectives in moving products forward.
Right.
So, Chandra, if I were to describe Syngene, essentially it's scientists working in the lab, putting our partners' science to work. we essentially help global pharma companies discover, develop, and manufacture new medicines. That's what Syngene does in a nutshell.
Right. I was going through, the breakup of your revenues, and I think 95%, over 90% comes from the services that you provide to global pharma clients. I think 8 out of 10
Yes.
top global pharma names you're servicing. But now you're also planning to get into contract manufacturing. Tell us a little about that. What value is that going to add in the near term?
So sure, our customer base is strong. We support over 200 customers, and our focus is on new molecular entities. And as a consequence of that, the majority of our customers are based in the West, in the United States and Europe, but also in Asia, in Japan, and some in India as well. We are looking at supporting them in discovery and in development, and manufacturing is a large part of our business. And we are looking at extending our manufacturing into the commercial arena. We're in a manufacturing facility here, and this facility supports pilot manufacturing, scale up, and it supports our clients in their clinical trials. And we would look to extend that and support some of our clients in the commercial phase of operations as well. It's an exciting opportunity for us to move with our partners as their molecules move into the market and access growth opportunities as well.
Right. Manoj, take us, through some of the details. For example, your top 5 clients, what kind of contribution do they make to the revenue? How much of that comes from them and the work that you do?
So, Chandra, our top 10 clients contribute to about 70% of Syngene's revenue. More than the revenue, we make significant contributions to their discovery and development efforts. As Peter said earlier, when these clients want to develop and discover and develop new medicines, that's where Syngene comes into picture. What we essentially give them is a cost-effective way of discovering and developing new medicines. This makes material difference to their R&D effort, and that's what Syngene is all about. What we offer are integrated services in discovery and development and help them come up with new medicines that help patients all over the world in a cost-effective way. And that's where we make a difference.
So cost is your biggest differentiator?
Well, cost is one of the differentiators. Cost arbitrage is one of the differentiators, but at a comparable quality. See, these are global multinational pharma companies who have certain quality standards, who have certain standards of innovation, productivity. Cost by itself can't be a differentiator. Right. Of course, we give them cost arbitrage, but at the quality, the kind of innovation they are looking for, the kind of productivity they are looking for, when you put all this together, it makes tremendous sense for a global multinational company to work with Syngene.
Right. Peter, apart from manufacturing for others, you've also filed NDA for one molecule, and I believe 2 molecules are, in later stages of clinical trials. What kind of opportunity does this spell for Syngene in terms of diversifying your revenue base going forward?
So I just need to correct you there. The FDA application was made by our partner. Okay. The asset belongs to, the product belongs to our partner, but one of our partners has submitted an NDA application, which shows that they're getting very close to a decision from the agency, and that could result in moving into the marketplace, which is very exciting for us. And we're working with a number of partners in their late stage clinical programs, supplying them with the product from here. Now, if they're successful in their applications, they'll move into the commercial phase. And we've been working with many of these partners for many years and have become partners in the expertise behind their products and the chemistry and the yield improvements and the purification and so forth. And we believe we're well placed to continue partnership with them as they move into the commercial phase of the life cycle of the products.
Right. And the CRAMS space, to an extent, it's also a crowded space because, apart from standalone players like yourself, you also have all these big pharma companies who have a CRAMS play. So, how will you really differentiate yourself? And is it also becoming very commoditized in that sense, the realization gains that you make here for the services that you offer?
Yeah. So partly what you say
because
is
the margins now 30-31, will that be sustainable going forward?
So partly what you say is correct. This is a crowded space. However, the space in which we play, which is discovery and development of new molecules, is not such a crowded place. The reason being, as Peter described earlier, we have this early discovery that we do for our partners where we discover new molecules. These molecules now need to be taken into development. During this development phase, while clinical trials are going on, we develop processes for these molecules. This pilot plant, this manufacturing plant that you see, essentially does that. It allows us to develop processes for making these molecules, the processes which are reproducible, scalable, safe, and robust. Right? So when we develop these processes, we generate tremendous amount of knowledge on these processes. Another very important element is Syngene's IP track record. Syngene as a company, over last 20 years that we are in existence, 21 plus years in existence, we haven't had a single breach of data confidentiality or IP. Therefore, our partners have tremendous trust with the kind of track record that we have. So now if you are a large pharma company who is looking at commercializing their molecule and wants a credible partner who can make these molecules for you, again, in a cost-effective way with the kind of quality you are looking for, processes that are well-designed, and the trust to maintain or protect that IP, why would you go somewhere else? So in that context, Syngene becomes a natural extension of its discovery and development services into commercial manufacturing.
Right. I also want to understand that currently does Syngene do any work for Biocon at all in terms of the CRO operations?
Yes, we do. We do support Biocon. Biocon are a customer of ours, just as 200 other clients are customers of ours.
But is it one of your top?
No, it's a very small customer of ours. It represents a very small part of our revenue now.
Right. Syngene, all these years has been a well-kept secret what it does. I mean, we just know it's a subsidiary which does CRO. But now with the spotlight, given the IPO and the public listing, what kind of pressure is this going to put on you, because every quarter you'll have revenue targets and margin targets. What kind of pressure are you guys feeling at this point?
So I think this is almost welcome pressure. Syngene has emerged.
Will it help fast track Syngene into a much bigger company than before, you think?
Not in of itself, I don't think. Syngene has been building on a very clear strategy in the last 5 years. We've very strong track record of growth in the last 5 years of supporting our customers and driving our revenues 28% over compound average growth rate every year on average. We've built a very differentiated and unique capability here in Bangalore of integrated discovery and development services, and we can apply these both to the traditional chemistry-based medicines which you see in this facility, but we can also apply them to biologics, the modern emergence of monoclonal antibodies and peptides and proteins. And because of the range of services that we can offer and the integrated nature, as Manoj has described, we can really build big strategic relationships. So we look to work with our partners over time and build additional services in, start to add more value, contribute beyond simply being competitive on cost and contributing to their productivity improvements and ultimately contributing to their innovation as they strive for their goals of producing medicines for the world.
Right.
And just to add to what Peter said, you are right that Syngene is not that well known in India. Partly, as you correctly said earlier, more than 95% of our clientele comes from US, Europe and Japan. So our business always has been with companies outside India, with global companies. Secondly, from Target's point of view, I mean, Syngene has always been part of the Biocon group, and therefore Biocon's overall target, part of that does come from Syngene. So we have always been looking at quarterly revenues and how can we contribute better to the overall Biocon revenue targets and so on. So that always has been there. Going public, we understand that there is a higher, there's a burden on our shoulders that we now are, yes, responsible to our shareholders and so on. But I think we are well placed to handle this.
Sure. Thank you so much. Great meeting you, Manoj
Thanks.
and Peter, for
Thank you.
giving us an in-depth understanding of Syngene. So that really wraps up this special show that we have done on the Syngene IPO listing. We've gone beyond balance sheets, beyond numbers, to really explain what Syngene does, a ground report from the Syngene plant here in Bangalore. We certainly hope you enjoyed this special show. Thanks so much, and keep it with ET Now.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.